Hello, everybody. Welcome to the Trading with Ashley show. I hope you had as much fun at trading today as we did inside the community. I wanted to offer a brief update to those of you that knew we were doing a Buy Right challenge. So I trained a lot of you on my free webinar, and you probably have been enjoying trading like we had this week. Inside the community, we have taken that $30,000 and in just 5 trading days, we have already produced almost $900 in closed trades. And we still have a lot of money left over for some incredible trades that we will take at the end of this week. Now, I am really excited for our community members, not only because they're making money, but because they are learning. They're learning a lot of trading lessons and ways to trade. So one of the lessons that they're learning is you have to know when to cut your losers. So I had called out a trade that we were waiting patiently for it to perk up to start making us money, but I noticed that it was breaking down. It wasn't actually doing what we wanted it to do. So I cut my losses. I sold for a small loss, and then I put on an alternative trade with a completely different ticker symbol, and we made all that money back plus some. Another lesson that they're learning is the power of the delayed buy right. So we have had a wild trading week. We have seen stocks go up. We have seen them go down. And one of my favorite strategies is the delayed buy right. So a good example is SoFi. We waited till SoFi pulled back yesterday. We went ahead and bought our 100 shares. And then today we were able to enjoy selling a call on it, getting great premium, but also we got a lot of stock appreciation as well. So you can take all of these different trading strategies and you can make a lot more money if you just have the confidence and know what you're doing. So congratulations to everyone in the community. We are on fire. 5 days, already almost $900, and there are still another 5 weeks to go in this challenge. So I cannot wait to see what all of you do. But what I wanted to talk to the rest of you about is earnings and the volatility with earnings and how you can potentially play earnings either now or in the future. You know, a lot of my videos this past week have been on earnings, and I have searched out the potential move on trades like Tesla and Google and given you some potential strike prices that you could take some trades. Well, I wanted you to know the expected move on Tesla was about $20 up or down. On Google, it was about $10 up or down. So we're about to go see how we are performing with those expected moves and to see if we stayed out of harm's way. But I wanted to caution those of you that try to play earnings by buying puts or buying calls. So if you buy a call, you think the stock's going to go up post earnings. If you buy a put, you think the stock is going to go down post earnings. But because of elevated IV, you are overpaying quite a bit for those calls and puts. So what I like to do is I like to take on trades that sell options. I sell puts, I'll sell calls, or I'll do something different and I will sell a put credit spread. And I'm going to show you an experimental trade that I put on just this week. It expires at the end of the week. I used the expected move on Tesla to see if I could pick out a trade that ends up giving me a lot of money on volatility. Now, if you usually buy puts or buy calls, a lot of you will share with me that you like to do something called a straddle. That's when you buy a put and you buy a call so that you can take advantage of a spike up or a spike down. But I think what you're going to find is if Tesla and Google just kind of hung out in the middle and they didn't even hit their expected moves, then those trades unfortunately won't make you enough money to compensate you for the fact that you bought both of them, and then you've got that elevated IV you paid. IV does die down after earnings, so usually after earnings you just cannot get enough money when you are trying to sell those to make up for that trade. But if you are really confident on a direction, you can do other types of trades. Even if you're not confident on a direction, as long as you just stay within the realm of the technicals and the expected move, you should win about 80% of those trades that you're doing over earnings. So let's go ahead and check on Tesla. Let's go check on Google, and then let me show you the Tesla trades that I did. Like I said, these were an experiment. I was actually helping a couple of my children that wanted to learn how to trade. I was helping them with some trades over earnings so that they could see how it moves and how IV affects the trade. Let's go take a look now. First, let's take a look at Google. So currently after market, it is sitting at about 193. So it has gone up $3, but remember that expected move was 10. So we'll have to see how it performs tomorrow and see if we do go up that $10 or if we end up slipping down a little. But if we didn't have a violent move up after hours, more than likely we will be more muted this week. So if you took any of the plays in my community that we took for earnings, we should be just fine looking at the IV and how that dies down after earnings. A lot of our plays will be able to get out in the next few days just fine in profit. Now, if you look at Tesla, it's still moving, but currently it's sitting at 320. The expected move would have taken it potentially down to 310 or as high as 350. But as you can see, we haven't quite gotten there yet. So if we do get down to 310, we will more than likely see a bounce as buyers step in based on what we saw on the put-call ratio. So now let's go look at a couple of the trades that I did so we can see how much I was able to profit in just a few days. And I played earnings, but I did it through selling put credit spreads instead of buying options. Here's the first trade I put on, and I went with the 295 for the sold put portion of this trade because I wanted to get under 300, thinking that if we did dip below 300, even though the expected move was only to 310, that at that point buyers might step in. Now this one does expire this Friday, and the purchased portion of the trade on the purchase put was $282.50. Now for this trade, the premium I received was $234. That is the 78 cents a share times 3 contacts, that's times 300. The second trade I put on was similar, but I did do it just a little earlier, so I was able to garner more premium. I did this one starting at the 295 strike, and then I sold the 285 strike. There's a $10 spread, so that's $10 wide, meaning it'll take $1,000 for each of these trades. And I went ahead and did 5 of these, and at $1.20 a credit per share, that yields me $600. So if both of these expire worthless in just a couple of days, that will be over $800 in premium, and I was able to do that without buying options. Okay, I hope that helps you. I want you to all do me a favor. Check and make sure you are subscribed. But more importantly, go ahead and sign up for my free newsletter. I put a lot of energy into my email content, and I try to send you thought-provoking trade ideas along with different strategies to trade. And I would love to be able to communicate with you that way. So if you'll sign up for my free email below, I don't think you'll be disappointed. Remember, if you're with me, Trading with Ashley, there is no trader left behind. I picked out another video for you. I'm going to leave that for you right here.